The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look here at the DAX like we usually do. The first chart that I posted, of course, is the smaller hourly chart. As you can see, it completed a pretty nice ABCD. And if you look at the second chart, which is the daily chart, you'll see the market on a daily chart has not quite made that ABCD. The thing to I think should you pay attention to is the fact that since the market bottomed, a week or so ago, there's been very, very, very small bounce. I mean, virtually nothing at all. So I think that that's a sign that we're getting ready, to head south in the markets. But, we'll have to wait and see what the market gods have in store for us. By the way, at the break today, we're going to have our good friend Rich Anderson on the line. There's some news coming out in the soybean oil market that is pretty important. Oil is up strongly today, and we'll watch that also along talking about beans and wheat and corn and some of the other things that he follows. Folks, there's been a lot of chatter on the internet about this solar eclipse. One of these comes from Business Insider, which is one of the more premier places for insider. Well, I don't know if it's insider information, but they showed the eclipses that we've had that are similar to the one we went through. There's been 16 of them since 1918, and it shows that of those in those 16 years, there was only 2 down years, 1959. And again in 1972, those were years when we were starting a recession. But the problem with this, folks, is the fact that it's only 16 samples. And really, if you're going to do statistics, you really need a minimum of 50, preferably 100, in order to get a relatively good sample size. So that's why, and I personally believe, after looking at a lot of these cycle stuff, that when you're looking at these eclipses, you're looking at the influence of that new moon for the solar eclipse and the full moon with the lunar eclipse. So that's what I think it is. I think it only lasts somewhere between 3 and 8 days, and we'll see how the market responds, from that level. But we came off here very strong, and we went right up to a 61% retracement in the E-mini S&P, and the Dow got to not quite a 78% retracement, but the overall market, the New York Stock Exchange Index, that just made a 382, folks. If you can, this is much weaker rally than we've had before. I mean, it looks strong with the Dow Jones and the S&P and the NASDAQ, but if you look at the overall market, and I'll post that here so that you can see it. Give me 1 second if I can find it, and I know I can because I just did it. Give me a second. I think I just did it. Is that it? No. Okay, well, that's the way it goes. Let me do the Dow E-mini first. You'll see that it made a 61% retracement here, and then we're going to take a look here at hopefully we're going to see it. I'm going to be able to look at it here. Here we go. We did find it. The old cobwebs are coming in vogue here. Just a second. We'll pull this up. This is the big stock market, folks. This is the New York Stock Exchange Index. The top 200 issues based on capitalization. And you notice here that we've made a 382 retracement. The other thing that's very important here, if you'll look at the time between the 10th of August to the 15th, it did the same thing, the same amount of money, the same amount of move. We went from 11,765, 11,891, so it rallied 1,000 points, and we did the same thing from the 18th of August to where we were yesterday, and that was a 382 retracement of the high that we made back on August the 8th. and it was also a 61% retracement from the high that we made back on August the 16th. So this was nothing more than a dead cat bounce, and believe me, the cat has been dead for a while. I think he died on August the 8th. God rest her soul. And then we'll see if it's going to go down. But gosh, it has so many things set up for it to move lower, folks, that it's just fact is, I haven't seen one this good since Hector was a pup, and he's 103 now. So I just really think that we're going to be going down big time and scare a lot of people. That and I could be wrong. And if we get above 22,100 in the Dow Jones, I'll certainly be wrong, and above 2487 in the S&P, that'll be time to take the old little burro out of the old barn, put up the saddle, and ride off into the sunset looking for a new line of work. But this is what I'm looking at. It looks pretty interesting to see what's going on. Okay, now I wanted to cover something that was also sent out by the S&P service, and it's about cycles in the market. I just wanted to talk a little bit about these. These are some of the cycles. You're right, Randy. That saddle is ready for the old burro. I've got it ready, so it's not a problem. I've had him saddled before, Randy. I really have, so it's not a big deal. But when you see things this clearly, you just gotta you got to pay your money and take your choice. But this is a combination of several stock market cycles. Remember, we've had Bill Meridian on talking about some of these. We've also had Stan Harley, who will be my guest tomorrow, talking about some of these. But on this particular cycle projection, you're looking at the equal weighting of the one-year seasonal cycle. In other words, the market usually tops somewhere in July, August, and then you have the four-year presidential cycle and the 10-year decennial cycle. So they're all coming together, and that's what it looks like when you're watching this. Now, when I started doing my cycle work, I did it with the Hearst stuff, which is very similar to this. But later on, when Dr. Miller got me interested in the astrology part, I wanted to be able to see what she was telling me. And what we did was we went back and researched the cycles, and nothing was better than looking at these astral cycles, because when they all come together, when you have these conjunctions and oppositions, like we had in 2009 and 1982, 1974, 1932, I mean, those are the ones that really give you a really close bird's eye view that astrology does have some, value in this. But frankly, it's far from perfect. I do believe that sometime it's on my bucket list. Is one of the things that I'd like to have on my bucket list is to see a segment on CNBC or Bloomberg or in the Financial Times where they're actually talking about the astroharmonics of the market, and someone's actually done the research. People have done the research, but the problem is they don't always report this research because they want to keep it to themselves, and that's that's something very innocent. The scale on that last graph is let's put it up here for you, so you can see it. I'll get it up here. If you want a copy of this, if you'll just let me know and I can send it on. The scale is not related to. It's just a timing scale of when the thing is supposed to be happening, is all it is, Bill. It's not based on any particular time. It's a combination of all. Let's put this up so we can see it a little better here, and it's based on that. Let's get right back. 877-927-6648. We'll be right back.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've posted the chart of a hourly chart of copper. As you can see, we're watching a 3-drive pattern here unfold up at this 301 level. I believe the high was 301.90 or 302. We're now trading at 297. But this is I think, a very important setup that's coming. And again, this is my opinion. It's not etched in stone of any kind like this, but it looks very, very interesting. And I'd like to show you one more time to see what's going on. We'll take a look here. We'll look up here. We'll see here that we have the long-term weekly chart in copper. I'm going to show you this because I really think this is an important part of what we're looking at. Because remember, it used to be called Dr. Copper. It told you what the economy was doing. And as you can see, copper has only made a 382 retracement from the 2011 high at $3 a pound. And it's taken a year and a half, from 2016 to the middle of 2017, 18 months to make that. In addition to making the 382 retracement of the 2011 high, you'll notice that the copper is also making a 61% retracement of the high of 2013, and it's also making a 78% retracement high of the high in 2014. And that's, to me, this is very, very important. It's telling you that the combination of these cycles is very, very important, and it should mean that copper is getting ready, to head lower. Now, so far, it's down about 5 cents from its high. It's no big deal as of yet, but if we close below that 294 level this week with 3 days to go, you'd be looking at a weekly reversal, and that would not be a bullish sign in copper, in my opinion. Now, like we say in the trade, sometimes it's chicken salad and sometimes it's chicken poop. It depends on, what you mix it with. So unless it closes below the 294, it really doesn't mean very much. So remember that that's just an opinion that we're watching, and you don't need to worry about anything else until it gets below that 294 level, and then you should start to be concerned about, copper going to the downside. Now, like we say, this is all based on patterns. It has nothing to do with the fundamentals, and we hear the news that China is buying everything in sight, which many times what they say and what they do is totally different. So keep in mind that that's what we're watching here in the copper. But this is a beautiful pattern in the copper market, and we'll be able to look at it very, very closely. Okay, we've had a request to take a look at the crude oil. We'll put this up here. This is the daily crude. And this is the big rally that we had on Friday. And as you know, we've given back 78% of that very, very quickly. The $64 question is here is if we get below that 47 level one more time, this means that the rally that we had on Friday was nothing more than a 61% retracement of the high that we made up at 50.35. That's the way it looks like. It should have gone sharply higher on Monday or Tuesday, and it's stopped dead in its tracks Sunday night and, turned right around, which is telling you that fib number must have been relatively important. That's the way I would think, I would view it anyway, but whether that's going to be the case, we have to let the market tell us, but that's what we're watching. Anyway, if you have any questions, folks, it's 877-927-6648. Okay, now, our good friend Mr. Z in the den has asked a question about the Treasury bonds, and this is a really good question, John, because I'll put this chart up on bonds because I wanted to cover it because I really think we're getting ready to break to the upside because the stocks are going to, well, all right, boys and girls, I got to get off my soapbox because I'm not going to talk any more about being bearish because I get myself in trouble. Anyway, if you'll notice here, here's the Treasury bond daily chart. We have a 3-drive pattern. If we get above 156.22 on a closing basis, to me, that's going to tell me that we are heading up to 158. Now, that's two handles. That's $2,000, and that would complete a big ABCD pattern. It would get everybody bullish on Treasury bonds, I believe at the wrong time, because this would be nothing more than a 50% retracement on the long-term daily chart. But it's got a chance to do that. So watch that 156.22. If we close above that, I believe that you could easily make that 158.26 level. So it's it's marginal here because it can go either way, and stocks and bonds can go down together. And hey, maybe stocks are going to go up. I don't know. So we'll just watch it closely, but that's a very, very interesting pattern. It sets up absolutely perfectly, and you certainly can't fault it for anything. That's the main thing. So remember that that's something that we really need to watch. That's on my watch list for sure. And right now, it's doing what it's supposed to be doing, and that is confusing everybody up at this 156 level. But the other thing is it hasn't backed off very much, folks, and that's a sign that it probably wants to do that. And in addition, as we're chatting here in the den for Tiger TV, there is this Jackson Hole thing going on, where we're going to have probably a battle between Janet and Mr. Draghi. And I don't know whether it means anything or not. Long-term rates are going to go higher, but short-term we could get, a big move just on a flight to quality if the market, really gets going. But the fact that it's just coming back, and comes right back in the bonds is telling you that it doesn't want to go down very much. So that's I think it's very, very important. So watch these bonds at 156.22. I think you could see a lot of fireworks taking it up to the 156 level. Now, the other question is, does it have anything to do with gold and silver? Folks, I have to look at each one of these cycles or commodities that I'm looking at. I look at each one separately. I don't know the fundamentals behind this, how many there are out there or anything like that. The main thing that I watch is I watch what the prices are doing. If the pattern is there, that tells me what I need to know because I try to risk the X amount of dollars that you have, and that's really what I'm trying to look at. So watch it very, very closely. You don't want to be short bonds if they get above this 156.22 level, because we could be looking at a pretty big move, to the downside. And with copper topping, which I think is true, I think it's okay. Remember yesterday, folks, we were talking about this E-mini S&P having a chance for a rally, and that's exactly what we did. We had that ABCD pattern down at the 78% level, and we rallied very strongly just for one day maybe. You see, there's only just one day. And you'll notice the last time we had that bottom, we rallied for 3 days. But yesterday's high in the S&P was right at the 61% retracement. That's another thing that tells you that there's something pretty interesting going on. But if you look at that New York Stock Exchange index, that's telling you that the market is incredibly weak. I mean, it's really, really weak. And you'll get further confirmation of that, if you look at the IWM. And we'll put this up here, to take a look at it, and we'll see if we can get this up here so you can, folks, see how weak, the IWM is. It only closed at 136 yesterday. So that rally was equal to what it did from August the 10th through the 13th. So this market is not acting bullish. It really isn't. I mean, they're telling you it's bullish when you look at the Dow up 200 points in one day and the NASDAQ up 85. So we'll see, what's going to happen. When we take out these lows that we made here on August the 10th, then look out. We're going to see some interesting things to the downside. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We have Rich Anderson of Anderson Capital Management on the line. Rich, are you there?
You bet. Good morning, Larry.
Good morning, dear. Listen, before we get to the grains, we've had a question from one of our listeners in the den about the Treasury bond market. Do you have any news you could share with us on that?
Well, the news is going to be made in Jackson Hole this week.
Mm-hmm.
That's where you have the economic conference, and you'll have Draghi and all those guys, yelling out there, talking. And if there's anything, that's where it'll come from.
Do you have a service that gives you an idea of what they're expecting or anything as far as the news? Because I know you read so much that I just thought maybe you might know of, economic service that you might use.
Well, Bloomberg TV, Bloomberg.com, DowJones.com. I mean, they all have headlines, and that's all you really need to know is the headlines. You don't need to subscribe to any services. All you need to do is look for news headlines, and then from that you can search if you want to drill down.
Okay.
But it's what these guys are going to say. They're going to be giving speeches, and what they say, like what was it a year or two ago, Draghi said we'll do whatever it takes, and that turned around the euro stock markets.
It certainly did. Rich, there was some type of news last night regarding soybean oil. Do you want to share with the folks what that was?
Oh yeah. They basically, we've been allowing soybean oil to come into this country and get blended for biodiesel and get credits, and now they're going to put tariffs on any imports of oil. The equivalent of which will make it unfeasible to do any blending to grab the diesel, credits.
Oh, okay.
And it's therefore the only biodiesel credits are going to come from U.S. soybean oil, which was the original intention. Nobody in their right mind would create a credit for the U.S. farmers that then would be given out to other people, right?
Mm-hmm.
So they just turning on the lights, as far as I'm concerned. But that should have a dramatic effect on the oil meal spreads. I mean, you're seeing that this morning. The oil's up 64, the meal's down $1, and it's about time. It should have happened a long time ago. It should never have had that problem to begin with. But so often they create legislation and don't look at the unintended consequences or the loopholes that are there.
Rich, we have a couple questions regarding corn and wheat. Do you see anything in the horizon that could make corn and wheat rally from here?
Well, last year we made our lows the end of August, and we're kind of getting close to that same time frame this year. Right now they're beating up the wheat market on the ideas that the Russian crop is 5 million metric tons bigger than what they had thought a couple of weeks ago. The corn, the pro-farmer crop tour is out right now, and these guys actually stop at designated areas every so often in all these different states, Ohio, Indiana, Nebraska. And what they do, Larry, is they take 2 rows of corn and they go out 17 feet 6 inches. Why they don't go 17 feet 5 inches, which is 1/1000th of an acre, I don't know. But I suppose it's splitting the stock, really, right? So and then they count the ears, and then they divide by 2 because they're taking 2 rows, going out that 17 feet 6 inches, counting the ears, and then dividing by 2 to get 1/1000th of an acre, and then multiplying that, and that's where they come up with these estimated yields, which are coming in some areas, like in Nebraska, above what they had thought. And what we're finding out there is that heat with plenty of rain produces a heck of a crop, and in other areas, disappointment and less corn than they thought. So that's actually what's going on. So every night they'll stop in a town and they'll put out these press releases. They put one out last night. They'll put one out tonight. They'll put one out tomorrow night, and then they'll have a final of where they think the crop is versus the USDA crop.
Our good friend Simon,
6 inches, and then for the beans, they take a 3x3 square and then count the pods in every one of the plants. That's physically how it's done. More information than you need.
Yeah. That's for sure. Our good friend Cy Only of Sylvia's Financial, we had him on about a week or so ago. And of course, I talk to Cy almost every day, and he's saying that a lot of these services now have drones that actually fly over the crops and can actually get right down and look into the ear of the corn almost to see what's going on. So that's a tremendous technical advantage from what we used to have from just reading the Reuters machine, 40 years ago. So the technology is really something.
Early grain traders, what they would do is each weekend they would drive 200-300 miles out of Chicago in one direction or another, and that gave them a huge advantage. And today, I had a friend that did a crop tour last week, and he had a drone, and he could see the whole field that way, not just what's along the road. And you don't, getting over the fence. Of course, in Indiana and Illinois, they don't have so many fences like they do in some other parts of the country. But then, going in 17.5 feet, that's not a joy, and it really doesn't give you a whole picture. Whereas getting up there at 1,000, 1,500 feet. You can see the whole field and know exactly where there are any drawn-out spots, and it's a much better picture, no question.
Wow, it's truly amazing, some of the stuff that we're seeing now over the years. My gosh, Rich, we've known each other almost 50 years, and it's hard to believe the things that have happened. Remember when we first started trading, I think we had like 28 commodities, and we had to use the old Bunker Ramo boards or the Quotron machines. We didn't have any of this fancy stuff that we have now. And had to call our orders in with, the telephone. And now these people that are trading online are just like floor traders. They have a tremendous advantage, and that's, I guess, the reason why the volume has gone crazy. Rich, we got a question regarding ETFs. We noticed this past week that ETFs have now surpassed the volume of all the stocks. That's to me seems amazing, because these things are just created out of thin air, aren't they? I mean, they're just
derivatives of stocks.
Yeah, derivative of derivative. As Warren Buffett said, it's the weapons of mass destruction. Rich, do you ever think we'll run into a problem like we had with long-term capital where, the liquidity is just not there to cover the other side of the counterparty risk?
I've been to the ETF conference in Miami that's in January, and where that's been discussed, and basically what they'll tell you is you got to be in the big high volume markets, but they obviously are aware of the concerns that exist, and like the flash crash in May of what's that, 3 years ago, 2-3 years ago, and that really whipped a lot of ETFs around. And so then they made some limit minders on them, not unlike we have on limits on the S&Ps, but they're aware of those things, and they could see the potential, but we also have, what some people call the plunge protection team, which may or may not exist, but certainly that will buffet things out. But that's why these markets today are so much about flow of funds, because money starts flowing into funds, and if I'm an index ETF, I have to own X amount of these things, and there's a handful of them that make up the bulk of the move. So you got to.
Wow. Hey, listen, thanks for joining us, buddy. We'll have you on again soon. We appreciate it. Rich Anderson of Anderson Capital Management.
Bye-bye.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we just had Rich Anderson on, and always pleasant to talk to Rich and get us an idea of what's going on in the grain markets. The markets are actually not responding too well to the bullish report that we got on soybean oil. Soybean oil is quite a bit higher, of course, but it completed, as we mentioned here, I believe last week when we were looking at the I think it was down during the time of the lunar eclipse when we had the, it was right near the lunar eclipse that we had, and we'll put up this chart of the soybean oil, and we'll take a look at this right here. You'll notice that we made a beautiful Gartley pattern down there at the 61% retracement at that 33 level, and you can see the big gap that we had last night and early today where we went up and matched those old highs at 35 and change. You know, that's a 2-point handle in the soybean oil, which is $600 a pound, so that's a $1,200 move. But then again, you know, these things can reverse and go down very, very quickly. The fact that corn and wheat have been so weak over the past few months, well, not few months, but the last few weeks, is telling us that we've had some, you know, really good crop weather, and it makes it look like we're getting ready to have a bumper crop and all these things. That doesn't mean it can't be, you know, absorbed very quickly. Folks, we're only one crop away from famine. I mean, if we had a bad crop here in the United States and one in South America, you'd be looking at some real serious stuff. And believe me, crop failures and famine are stuff that wars are fought over. So that's another thing that we want to keep looking at about what's going on with these grain markets. But they're still holding up okay. The crude oil is holding up all right, folks. We held that 786 retracement. We mentioned how important that 47.25 level was. So it's just building. It's just building. You know, more of a case to possibly go higher, but we need to get the crude oil above 49.50, and then it's got a chance to really get it moving to the upside. So we'll watch it very, very closely for sure. Remember, we're coming into the end of August now here this next coming week, and tomorrow, Friday, is going to be a very, very interesting day because that's going to mark the high of the stock market on August the 25th of 1987. That's when we had harmonic convergence. This was one of those times where we had all 5 planets all in the sign of Leo, and they were also they were lined up to, they were either conjunctions or oppositions, and also we had a new moon at that time too. So there were 5 major planets. I think there was Mercury, Venus, Mars, Jupiter, and I believe Saturn. All 5 of those were at 0 or 180. So there was just everything lined up. And the only other times we've seen this over the past 100 and some years are at major tops or major bottoms. Especially 1974, we had a double bottom in the stock market where we had double oppositions and double conjunctions in October and December of that year. That's the thing that Dr. Miller showed me when she was doing her research that really got me interested in the astrology part, because when you see something that's that accurate and then go back and look at it time and time again, that you see this happening, that it's very, very interesting, and to watch it. But we try to look at some shorter term things here, to watch it, to see what's happening. So keep an eye on it, because the 25th should be a very, very strong anniversary date. Boy, I certainly remember the crash of October of that year, because that was something to really. Do you have an image to post on that? Yes, I do, Mr. Z. The problem is that I'm not home, so that I don't have, it's on my big computer, one of those 42-inch screen deals that I don't use anymore, but I do have that. I posted one, when we come up to the next break, I'll post the one from 2009 to let you see what that looked like. I think I can pull that one up to see it. But basically, when you're doing the study and looking at these astrology, you go to the highs or lows, and then you go to the computer and ask the computer what was happening in the sky around that time, and it tells you this is what it is. So if you go back and look at previous lows and previous highs, and you're starting to see the same thing occur at each of these highs and lows, it's giving you a pretty good idea that these are pretty important cycles. And that's what they are. So all I do is I try to look at the ratios and the patterns to see if we can get up into this zone where we don't have to risk very much. And that's what I try to do. Sometimes I'm right, sometimes I'm wrong. Like the old prince said, you have to kiss a lot of frogs before you find the princess. So remember that it's not how many trades you lose that counts. It's how many trades you win that counts. It's how many trades you lose a very, very small amount on. And that's the key, to watching these things, as near as I can tell. So it's very important, to remember that you're only right part of the time. Nobody is right all the time. Only person that's right all the time is God, and she only trades a couple times a year. So just remember that you've got to be really kind to yourself when you're doing this, because you can certainly get into the problem of thinking that you know a lot more than you do. And believe me, folks, that's not the case. One of the other things that I wanted to get back to the stock market is to show you the weakness that we're having here in the Dow Jones Transportation. Even with the stock market rallying, the Dow Jones Transportation, does very little, just like what the IWM does, that it's just not bouncing. And when you look at the New York Stock Exchange Index, it's also telling you that you're looking at something that could be, really, really dramatic. So pay attention to it. That's the main thing that you want to watch, because these things are based on probabilities. There's nothing more, nothing less. You have to take responsibilities for the trade, and that's the main thing. And we want to try to strive to be consistent, and that's not an easy thing to do. You've got to do it in baby steps, folks. You just don't walk up some morning to the monitor and say, oh, well, looks like I'm going to start trading today. No, that's not what you do. You learn a little bit. You take baby steps, and to learn to be a trader is the equivalent of a college education, but far, far more valuable, because you're dealing in a business that has really easy entry. You also can, you're within seconds of closing the whole thing down. There's no business in the world that you can do that with. It's just ease of entry, ease of exit. But the problem is the tuition is when you get in learning to do this. And that's the whole key. You've got to be able to, learn how to do it. And then after you learn how to do it, you've got something that you can really fall back on, and really make but as trading's not for everyone. I've got 2 beautiful daughters. When they were little, 11, 12, they got interested in looking at the charts, but they got so bored at doing it, they didn't like it. and they never have. They like the fruits of it, but they certainly didn't like the trading part of it. But other people do, and that's why it's not for everyone. But those of you that can stick with it, and the words of Winston Churchill, never, never, never give up. Just that's the one thing that you don't want to do. Even when you have good periods or bad periods, you should be able to stick with it, because over a long period of time, it's going to treat you pretty well. But it does take time to learn to do it. And believe me, folks, if you think you can do it in a few months, you're wrong. Most people, it takes 2 or 3 years, possibly more. And, here, me, 55 years, and I'm still learning. That's right. You're right, Mark. Trading, you only fail when you give up. Like Wayne Gretzky Wayne Gretzky, the great hockey player, says, you lose 100% of the shots you don't take. And that's why you've got to remember to, pay your choice, pick your shots, and move on. Take a break. 877-927-6648, and I'll get off my soapbox.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi, folks. The 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion. You can receive 60 weeks of the Gold Report for only $600. That is $10 a week, which is a savings of 50% off the regular price. If you want to understand the entire supply and demand equations that move the gold market, including where the XAU, HUI, and mining equities are looking to trade, if you want to understand the correlation between the dollar, the yen, the South African rand, bonds, and gold, the Gold Report is for you. I'll give you the entry price target, and stop for each equity, ETF, future, or option trade. The Gold Report is a long-term newsletter with the focus on building real wealth to a successful portfolio of gold and silver equities. You can take advantage of this special promotion until August 27th. That's 60 weeks of the Gold Report for $600, which is a 50% savings. Go to the front page of TFNN.com or call 877-518-9190 and order now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to bring up a long-term chart here of the Dow Jones weekly because this is my opinion, of course, and, you know, that's all it is. This is the possibility of what we're looking at here for a move. That's 3,000 points in the Dow. That's what, 15%. Anyway, that could be one of the possibilities of a retracement if we have one of these downdrafts that we're potentially looking at. You'll notice that gets very close to that 2100 level in the S&P 500, but you'll notice that 61% of the move from January of 2016, and it's also 78% retracement from the election night that we had. That was very, very important. So keep in mind that this is just a rough idea of what we're looking at. I did the same thing back in 1987 after the August 25th high came in. I'm doing the same thing now. If this is correct, if we take the August 8th high, which was the high of the market, and you add 55 days to it, it's going to get you into the early part of October. So if you think, this looks interesting to you, you can buy really cheap puts on the Dow Jones, at 21,000 or something. If it's going to go to 18,000, that's a lot of bread, folks. You can put a lot of bacon and bread on that at the time. So it may not work, but it's something that if it does work, it's going to catch a few people by surprise. I believe if we get below 2,400 in the market for the S&P 500, that's going to be the start of it. We're 45 handles away from that right now, but it doesn't take very much to see it moving in that direction. Anyway, that's what I see. Neither here nor there, but that's pretty much what you're looking at. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Hi folks, the 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion.